The Boeing Company (BA) and Northrop Grumman Corporation (NOC) are two prominent players in the aerospace and defense sector. BA operates through four segments: commercial airplanes, defense, space and security, Boeing Global Services, and Boeing Capital. NOC operates through four segments: aerospace systems, innovation systems, mission systems, and technology services. Because a $706 billion Pentagon spending bill has been advanced by the House Appropriations Committee on a party-line vote, the aerospace and defense industry is expected to attract investors' attention in the coming months. Furthermore, the demand for aerospace and defense equipment is increasing as several countries focus more on strengthening their defense capabilities. Investors' interest in this space is evidenced by the iShares US Aerospace and Defense ETFs (ETA) and SPDR S&P Aerospace and Defense ETFs (XAR) 29.1% and 36.8% returns, respectively, over the past 9 months, versus the SPDR S&P 500 ETF Trust's SPY 25.1% gains. The global aerospace and defense market is expected to hit $973.2 billion in 2025, growing at a 6% CAGR. While NOC has gained 15.7% over the past 9 months, BA has returned 35.6%. However, in terms of the past 6 months' performance, NOC is a clear winner with 21.1% returns versus BA's 9%. But which of these two stocks is a better pick now? Let's find out. Latest movements. On April 12, NOC and the company's wholly owned subsidiary, Space Logistics LLC, successfully completed the docking of the Mission Extension Vehicle 2 to the Intelsat 1002 commercial communications satellite to deliver life extension services. NOC is the only provider of flight-proven life extension services for satellites, and it was the second time the company has docked 2 commercial spacecraft in orbit. On July 14, BA and Sky NRG Americas formed a partnership focused on scaling the availability and use of sustainable aviation fuels globally. Boeing will also invest in Sky NRG Americas' SAF production project, for which Alaska Airlines is a partner. Boeing, Sky NRG, and Sky NRG Americas will work together to accelerate SAF development globally, focusing on scaling production capacity, building awareness, and engaging stakeholders throughout the value chain, including airlines, governments, and environmental organizations. Recent financial results. NOC's total sales increased 6.2% year-over-year to $9.16 billion for the first quarter ended March 31, 2021. The company's adjusted net earnings came in at $1.08 billion, up 23.8% year-over-year. Its adjusted EPS came in at $6.57, up 27.6% year-over-year. For the first quarter, ended March 31, 2021, BA's revenues came in at $15.22 billion, which represents a 10% decrease from the prior year quarter. The company's net loss came in at $561 million, versus $641 billion in the year-ago period. Its non-GAAP loss per share was $1.53 compared to $1.70 in the prior year quarter. Past and expected financial performance. NOC's total assets have increased at a 6% CAGR over the past 3 years. The company's revenue is expected to grow 4.9% in 2022. Its EPS is expected to grow 3.9% in its fiscal year 2021, and 4.1% in fiscal 2022. Furthermore, its EPS is expected to grow at a 5.8% rate per annum over the next 5 years. In comparison, BA's total assets have increased at a 9.7% CAGR over the past 3 years. Analysts expect the company's revenue to grow 13% in its fiscal year 2022. Its EPS is expected to increase 88.7% in fiscal 2021, and 498.5% in fiscal 2022. Also, BA's EPS is expected to grow at a 12.3% rate per annum over the next 5 years. Profitability. BA's trailing 12-month revenue is 1.51 times what NOC generates. However, NOC is more profitable, with a 12.10 net income margin versus BA's negative value. Also, NOC's ROA and ROTC of 6.21% and 10.13%, respectively, compare favorably with BA's negative values. Valuation. In terms of forward EV sales, BA is currently trading at 2.25x, which is 17.2% higher than NOC's 1.92x. And in terms of forward EV EBITDA, BA's 38.47x is 273.5% higher than NOC's 10.30x. So, NOC is the more affordable stock. Ratings. BA has an overall D rating, which equates to sell in our proprietary ratings system. However, NOC has an overall B rating, which represents a buy. The ratings are calculated considering 118 different factors, with each factor weighted to an optimal degree. BA has a D grade for quality. This is justified as its 2.04% trailing 12-month ROTA is 50.5% lower than the 4.12% industry average. NOC's B grade for quality is in sync with its 10.90% trailing 12-month ROTA, which is 164.6% higher than the 4.12% industry average. BA has a D grade for value also. This is in keeping with its 25.73x forward non-GAAP PE of, which is 22.8% higher than the 20.95x industry average. NOC has a B grade for value, which is consistent with its 14.83x forward non-GAAP PE, which is 29.2% lower than the 20.95x industry average. Furthermore, BA has a D grade for stability, which is in sync with its 1.63 beta. NOC's 0.83 beta helped it earn a B grade for stability. Of the 62 stocks in the air defense services industry, BA is ranked number 58 and NOC is ranked number 7. The winner. While the aerospace and defense industry is expected to witness decent growth in the coming months, NOC seems to be a better bet in this space based on its relatively cheaper valuation and higher profitability. NOC shares were trading at $363.89 per share on Friday afternoon, down 23 cents, minus 0.06%. Year-to-date, NOC has gained 20.50%, versus a 16.54% rise in the benchmark S&P 500 index during the same period. Thank you for watching this video. We appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire and we'll see you in the next one.